companies, entrepreneurs, finance managers, and directors. It is vital that you are in the know regarding tax planning opportunities and maintain tax compliance. So here is your opportunity to capitalize on high-class tax planning solutions. Our highly trained tax specialists are here to serve you. For more information, please contact Sygnus Tax Advisory Limited at 876-634-5016 or stateam@cygnusgroup.com. Sygnus Tax Advisory, one of the Caribbean's leading full-service tax solutions firm.
And we have joining us now Mr. Denzil Whyte, Managing Director of Sygnus Tax Advisory Limited. Morning, Denzil. How are you?
Good morning, Clive. Good morning, listeners. Great joining you again.
Yes.
Sygnus Tax 101.
Absolutely. And what are we focusing on today?
Today's program will be focused on responding to a query from a listener who asked whether or not if their Citizens Association or Homeowners Association ends up with a surplus, if they should be filing a tax return.
Oh, yes, I remember that call. Yes, I've been asking, Yes, love to hear this. Let me hear a response on this.
Okay. So the first thing is that we have to look at the formation or the nature of the formation of the Citizens Association body.
Okay.
So you can have an ordinary company. We have some gated communities, for example, that have the residents owning shares in a company which actually owns the common assets in the community. That can be play field, common areas, security booths, stuff like that. But the community homeowners own the shares in that company. Yeah?
Yes.
Or you can have a registered strata, and that would be under the mutuality ownership principles. You can also have Citizens Association that is not actually constituted by a company, right? They are actually just citizens who come together to ensure that they collaborate to benefit or advance the common interest.
Yes.
So you have many different ways they can be formed. To the extent that we're talking about mutual ownership setup,
yes,
then I'm going to talk to you some more about the mutuality principle or self-trade.
Okay.
And outside of that, there is Section 71A of the Income Tax Act that actually says every person to whom the section applies is required to file a return, whether they are liable to pay tax, Clive, or whether they even have income in the year in question.
Okay.
So the first part of the answer to the caller or the listener is that whether or not you have income, whether or not you have a surplus, the Income Tax Act actually places an obligation on you to file a return.
Okay. Yes.
I can continue.
Sure.
The issue though of whether or not you have taxable income is important to consider. Let's go back to the mutuality principle for a little while. Listeners and Clive, the Income Tax Act brings under its charge any trading activity. However, you can't trade with yourself.
Okay.
You, Clive, can't buy a car from yourself, sell a product to yourself, right? And in the same way, if we have a registered strata or a group, an association that is under the mutuality principle, then it is recognized that they can't trade with themselves. So if a member of the group actually makes a contribution to take care of common responsibilities of the group. It's like you making a contribution to yourself.
Oh, yes. Got a
right?
member of
And
that.
the mutual... Go ahead, Clive.
Because you're a member of that, yes. Got you.
Yes. And so it would mean that would be outside of the net of the Income Tax Act. Because it would be self-trading.
Yes.
But, you know, it gets interesting once we're talking about tax, right?
I'm telling you.
So let's say this same association or organization puts on a fish fry and sells fish and juice and liquor to persons who are not members of the committee. That wouldn't be self-trade.
Okay.
That would be trading that would be subject to income tax. And let's say that same organization actually goes on a fundraising drive and writes to different organizations and asks them to donate things to them.
Yes.
Even gifts that you receive as donations
Yes.
would be taxable to the association.
Yes.
Unless it is a registered charity. No, it's unlikely that the association is going to be declared a registered charity because it wouldn't necessarily qualify to all the benevolent purposes that would cause you to qualify.
Yes.
You know? And it's not even just a matter of whether or not you have a surplus. Because you can have and I probably should have even mentioned that the interest that you earn from the bank would also be subject to tax.
Oh,
you know?
Yes.
But you can't even claim as an association that the fact that you have a net deficit that you are not going to have any tax, because what is used to calculate the tax is taxable income less expenses incurred to generate that income.
Okay.
So for example, let's look back at the fish fry. You have the fish fry, you earn $1 million, and the project that you raised $1 million for was to fix roads in the community.
Yes.
And you spend 1.2 million. So you end up with a deficit. You can't say that the expense to fix the roads in the community that you earn from persons outside of the community was actually incurred to generate the $1 million.
Oh, yes.
That expenditure is how you spend the profit. It wasn't incurred to generate the income.
Oh, yes.
You know? So the issue of what would be taxable and what would be deductible, tax deductible in arriving at your taxable income, are things that you have to consider, even if you're a citizens association.
Wow. This is very important, you know, Denzil, because you have so many developments going on, so many citizens associations, and trust me, most are not really aware of this. You just want to have an association so everything runs well, you know. So this is very important information. Very, very important, Clive, for you to understand that if you're not a registered charity, you still have to be concerned with your tax and the activities that you engage in that will be subject to tax. Yes.
I want to step back in relation to the formation and look at the company.
Okay.
Because where you form a company that's not a registered strata, the homeowners are the shareholders in that company. That company is a distinct person, different from the shareholders. And you can't claim mutuality under that circumstance.
Oh, yes.
Now, nonetheless, you still have to consider whether or not the income that is received or the receipts would be subject to tax. Would they be trading? So a shareholder contributes monthly maintenance. And that monthly maintenance is supposed to, in part, be used for maintaining the assets of the company.
Yes.
And in part, for providing security to the homeowners.
Yes.
For example,
Mm-hmm.
the portion that relates to the shareholders contributing to the maintenance of the assets of that company would not be seen as trading income.
Okay.
It would be more akin to the owners of a company capitalizing that company to actually maintain the assets of the company.
Yes.
However, the portion of the income that relates to that company providing services to shareholders, which would be seen as a third party, not the assets of the company now, but providing security
services and so on.
Or the other services, that would be trading income.
Oh, yes. Yes.
You know, it's important as well to point out that there is currently a tax credit available to companies that have income under 500 million gross of 375,000. So if your net taxable income is less than 1.5 million, that tax credit should take care of it.
Okay.
So you should only have any material exposure if your net taxable income surpasses 1.5 million.
I see. Yes. Wow. You know, which is why we can see the real need for companies like Sygnus Tax, because, you know, these things, and let's face it, it can be very complicated, especially in the legislation. And so you need persons who can give the appropriate advice, who are, not only know what legislation is saying, but also knows the different creatures that are created and that are operating. So you can see whether or not you fit within the legislation and whether or not there are any tax breaks to be had by virtue of that.
Absolutely.
You know, this is really very important stuff. So, what's your tax tip for the day?
Well, the Sygnus Tax tip for today is that your tax liability or exposure does not disappear because you don't know about it.
Okay.
The exposure remains like a crouching tiger or hidden dragon waiting for you. Waiting, it can pounce on you anytime. So you want to ensure that you seek proper advice to at least have the information advantage. Knowing is half the battle.
Okay, excellent. And of course, that would also help to relieve your stress too when you get the proper guidance.
Absolutely.
How can we get in contact with Sygnus Tax Advisory? Because this is great stuff.
So Sygnus Tax Advisory has a group of tax professionals, specialists, and attorneys that are available to serve you. And we can be reached by telephone at 876-634-5016, by email at stateam@sygnusgroup.com, or by website at sygnusgroup.com.
Thank you ever so much. Mr. Denzil Whyte, Managing Director of Sygnus Tax Advisory Limited. A lot to chew on, but of course, always go to get the proper consultation and guidance. Really appreciate this.
Always here for you. We look forward to the opportunities to serving you.
All right. Thank you so much, Denzil. That is Sygnus Tax 101.
Companies, entrepreneurs, finance managers, and directors. It is vital that you are in the know regarding tax planning opportunities and maintain tax compliance. So here is your opportunity to capitalize on high-class tax planning solutions. Our highly trained tax specialists are here to serve you. For more information, please contact Sygnus Tax Advisory Limited at 876-634-5016 or stateam@sygnusgroup.com. Sygnus Tax Advisory, one of the Caribbean's leading full-service tax solutions firm.